8 minutes to 9. The outlook for the housing market over the next 3 months is the worst for 20 years. That's what surveyors and estate agents are saying. Why? And does that mean prices collapsing? And isn't that good for people trying to buy? Simon Rubinsohn is the chief economist for the Royal Institution of Chartered Surveyors. Henry Pryor is a housing expert. Simon, what does your survey tell you?
Well, actually, the survey is sort of suggesting that it's a fairly downbeat outlook. I'm not sure it's saying it's the worst for 20 years, but it's certainly saying that the outlook at the moment is fairly downbeat, and it's continuation of a trend, because actually what we've seen over the course of the last year is affordability constraints becoming more pronounced, particularly in London and the South East, the lack of stock on the market also exacerbating the problems there, and the change in the tax regime being a further factor which has affected certain parts of the market. All of that has sort of come together with this uncertainty about the political, economic environment.
So in practical terms, in terms of prices, what's it mean?
It means it's a fairly flat picture of prices. Actually, we're not looking at nationally at prices moving one way or the other in a big way. In London and the South East, they're slightly lower, and as you said in your introduction, slightly lower prices in London and South East arguably is no bad thing.
Do you agree with that, Henry?
Well, the important thing for people to remember is that there is a market. You can buy and you can sell. Yesterday, the ONS, the government's preferred barometer of the housing market, reported prices up slightly over the last 12 months, 2.6%. But most importantly, nearly 100,000 homes changed hands last month, which is spot on the long-term average. Understandably, estate agents get concerned. Their businesses are predicated on turnover, but absolute prices and volumes, most importantly, are holding up.
Wouldn't it be a good thing if prices started to fall?
It's a huge difference, John, between prices and affordability. As Simon's just touched on, the most important thing for people to remember when it comes to Brexit and what's going on later this spring is whether prices come down, whether homes become more affordable. House prices are
they're cheaper, they're more affordable.
Because house prices are predicated on the cost and availability of credit. If your mortgage gets more expensive or it gets harder to get a mortgage, it becomes harder to buy a house at the end of the day. So it's very important that people remember that lower prices don't necessarily mean that it's easier to buy a house.
But people with property regard the property as their capital.
A home in 6 months' time will still be worth one home, John. That's quite right. But the most important thing to remember is that houses are where people should live. We've got into a habit of turning them into pensions and to financial instruments. The RIC survey is not predicting Armageddon. The Bank of England's plans last year, where the governor came in for a lot of flack for predicting a fall of 30%, is not going to come to pass, and then that will not be tested, in my opinion.
Even if, Simon, even if there were to be a no-deal Brexit, in other words, we crash out, as some people put it.
Look, a no-deal Brexit, I think, will dampen the market further. I still don't see prices adjusting in a big way in a downward direction, for good or ill, partly because there isn't that much stock around in the second-hand market. So there is still going to be a balance between demand and supply. But I would reiterate Henry's point, and that is in terms of those people looking to buy. If you're looking to buy and you're looking to live in the property, there are opportunities at the moment. So actually, it's rather strange that we're sort of getting fixated with this sort of stagnation in the market, because the investmentisation of the product was one element which has sort of come out the market, but actually genuine opportunities in the market still exist, and as Henry said, actually there were 100,000 homes that transacted last month.
John, the majority of people who are active in the housing market are buying and they're selling. What impacts on their sale also will impact on what they buy. Brexit, therefore, is something, you'll be pleased to hear, of an irrelevance.
Thank you for that, Henry Pryor, Simon Rubinsohn. Thanks both.
Thanks.